The market doesn't care about feelings. The market doesn't care about emotion. The market only cares about what is the footprints in the sand. It's going to be good for us to always think about news. So in your journal, I want you to write out news. I want you to write out anything that you can revert back to that can help you as you are. The more notes you have, the more you can identify what's going on. So put that in your mind. Notes, write this down. Notes become my footprints. Trav on the charts, man. Let's see, what we gonna go with today? Let's go with, I think technology is gonna be an interesting one. So let's get on the chart. Let's get to it. So here's what we're gonna do. First thing we're gonna do on the chart, y'all. Let's go to it right quick. Boom, let's go to monthly. We're gonna start off with August on the Qs. All right, so we see that. We have I don't worry about the current. I like to worry about where we are. So here we are on this. We see we had a high. We'll mark something out right quick. Boom, we had a high of 583. Always go previous candle first, especially because it's the first day. Then we had a low, and then let's mark that right quick. We're gonna mark that with ML. PML, previous month low. We're gonna mark that with that previous month low, so we know that. And then we're gonna come right here and we're gonna mark that. We're gonna write on it, previous month high. You can see mine pop up because it already love it. All right, let's go with that. So we got our previous month low, we got our previous month high. That put us in the zone. Then we're gonna come here, right? We're not gonna look at the current candle yet, but we're gonna do this. Previous month, watch this. Watch what we about to put right here. Watch this. I'm boxing it in. Previous week high. We're gonna write that down. That gives us the data. Because what this allows us to do is to understand what we're looking at today. All right, so we got our previous month high, previous month low. We got our previous week high, previous week low, so we kind of know what's going on. These zones will help us out. Because now we can say, hey, are we hitting last month's low? Are we hitting last month's high? Are we hitting last week's low? Are we hitting last week's high? These gonna help us out a lot, right? So let's look at what we're looking at right now. Let's get our brush. So, I mean, we can just use this. Yeah, right. So we know from here to here. I'm not gonna use this because that don't go like that. This is where it was. You can use this, but you know for sure if I would have had it up previously, you'd have already understood that that was already broken at. So we actually came here with it. So it actually gapped down, right? That's where it actually was at. That was the diagonal, the horizontal, the diagonal line. I had already drew that out before, so we knew it. So it gapped down before under that line if you had your chart out. Why? I did that because I had already drew that out before, so I already knew where that line was. So I want you to see something. The reason why, because that was the swing low of this whole move, right? So what you already understand and you already see is that we are underneath the previous week's low, because you know that because we had that gap down already, right? We had that gap down already. Now, what we do know is, again, y'all know that I'm not a fan of trend lines like that. I like the diagonal lines, but I'm gonna use this for a reason. Everybody who was looking at the S&P, the QQQ, you already know it gapped down below your trend line this morning, right? So immediately you knew that triggered a different mindset for you. You went into a different zone. You honored that trend line, so when you saw that gap down, immediately you switched. So that's why I drew that trend line right there, because my people who was already looking at the Qs, that gap down already jumped under your trend line. You knew that already. So if I'd have put it on the other side, you'd be like, Trap, that's how I knew y'all be paying attention, right? I be thinking for y'all. I already know what y'all was gonna do. Trap, that went on right there. I get it, it was already there. So we see this uptrend that happens. We see this line right here. This tells us that we hit this all-time high, and then sellers got rejected, which is good. We understand that, right? But then what happens with the next candle here, we got to already expect that I already in my mind internalized that highs will be rejected. You need a bold move to put you past a high. You need a bold move to push you past a low. Now watch this. From an all-time high and a market low, here's what's gonna happen. You need some type of catalyst to push you past that. You need some type of news. You need some type of explosive earnings. You need some type of catalyst, because on its own, it's gonna be really, really hard for just a stock to just move past it on a regular day, right? So you're gonna need some type of catalyst to help push that. So right then in your head, you need some type of catalyst to help push you forward. Now, here's what you understand about this as well. The next line, this one here, where we talking about, you see sellers step in and push this all the way down. Now, when they push this down, I'm okay with it, because if you look at our trend line, which was there previously, it stopped right at that trend. It stopped dead on that line. So here's what you got to understand too. Watch this. On the bottom side of that line, there's orders right there. There's a lot of stops right there on the other side of that line. Always, 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 always. Why? Because institutions know what? Retail investors always put their stops right on the bottom side of their trend line. They know that. They play you for that. Right? So here's what happens. Now, the next doji we get is a what? To end the month, what do we get? We get a doji candle, which tells us what? There's an indecision. There's some type of indecision happening. Now, watch this. I want to show you how the news, don't think that news is random. Do not think that news that come out is random. Think about this. Toward the end of the day, watch this. The end of the day, Friday, which is the last day of what? August, going into September, when you can't do nothing about it, they come out and say what? Trump tariffs are illegal, which automatically causes what? The market to fall. I want you to always put that in your head. This news that comes out is not random. It never is. It's always predicated on some type of release to do something. So we understand, watch this, this how they got us. They drop that news, they already know what? Watch this, they already know, for my people with my trend line up, they already know you got the bloody September in your head already. So they already know, hey, if that thing go underneath that trend line, I'm out. I'm out. So what happened? We opened up Monday. Monday, we see Dow futures, futures fall. We wake up this morning, fall down. What happened? Everybody stops out. Because your stops don't go out. Watch this. Your stops do not go out overnight in futures. Your stops only go out when? In the morning. When the market is active. So what happens? They know everybody got them stops on the backside of that trend line. That gap down in the morning automatically does what to you? Take your money. Take your money. The reason why, watch this. So the reason why that, I'm not telling you not to do it or not, I just want you to be mindful that news that comes out isn't just coincidental. Certain things that come out play into certain things. Okay, let's go a little further. Now we get into the daily. So I'm going to take this off here because I just wanted to show that for that. Let's get into the daily. All right, so first thing we're going to do, what is our bias? The first thing we see is our current candle has a gap down, but it's green, it's cool. Immediately, what we want to do on this candle, is on this chart, is do this. Boom, boom. Watch this. First thing we want to do in that chart is that. Man, Trap, why you want to do that on the chart? Because the first thing we need to do is identify what sticks out to us immediately. The first thing that sticks out to us is that gap down. That gap down is actually what's called an imbalance. So that means there's orders going to be right there that got to get filled. Why? Because the market always going to do what? Search for any type of what? New money. Markets move the money. Markets search for money. So because they search for money, we want to identify where are the pockets where the market can go get money from. Right? We want to identify where are the pockets where the market can go get money from. Okay, the first thing we see is, boop, there goes a pocket. So that's the first thing we do. We see the gap down, immediately we write out, oop, there goes a pocket. Now let's go a little higher. Here's where we go. We look at our all-time high at 583. We come down, we say, okay, here's where we close at today. Now I'll mark this on my daily because it makes a whole bunch of more sense to me. With our mark, you can mark your daily low. Boom. You're gonna write that down. You're gonna put, watch this, because it's a new day, you're gonna write this on there. Where my thing at? Text. Watch this. Watch what I'm about to put. Because we going into the day, you're gonna write this. Because it's for tomorrow, you're gonna write this. Tuesday low. You're gonna write down Tuesday low on that. So now you're gonna understand, all right, here's what he is. I need to just make sure that can be a reference point for you, right? It can be a reference point for you. As you get into the week, you want to see, okay, where am I at? Am I at the previous week's low? Am I at Tuesday's low? This is the first day of the week. These type of things going to help you along the journey, right? Now, here's what we do know right here. When we look at this, watch this. So this move here, this whole up move is predicated off this candle right here. We understand that sellers stepped in, really came in strong. Buyers got sellers. Watch this. Sellers stepped in. We had a gap down, not really a gap down, but a push down. Sellers stepped in really hard, and then that was on Friday. Sellers stepped in really hard. What news came out Friday that actually helped push that down? What news did we have Friday that caused the Qs to go down? What was that thing? So it's gonna be good for us to always think about news. So in your journal, I want you to write out news. I want you to write out anything that you can revert back to that can help you as you are. The more notes you have, the more you can identify what's going on. So put that in your mind. Notes, write this down. Notes become my footprints. Write that down. Notes become my footprints because notes will help you identify what's going on. And you can say, oh, I know why this happened. I saw why this happened. I seen this do that, right? So you can start identifying what's going on, right? Yep, there you go. Somebody said tariffs. Somebody said, yep, that's good. We understand that. So watch this. So we also know that we came off this high. You have this right here happening, without us getting into all of that. You have this sellers pushing that down. Then we can identify for a fact that right on Tuesday's low, I want to show you something right here that's going to be interesting. So every candle you go to, you're going to have now you don't have to write this down, but I want you to notice this at 561. At 561, what's important is when you look at where this candle opened at, notice, and this is you really getting into the candle communication so you can start identifying certain points on your chart. Notice where this candle gets at. It stops right here where this candle is at. Look at this candle that falls right on top of it. Let me move this up a little bit. All right. So notice where this candle sits at. There you go. Now you can see it better. Notice where this candle opened at, right? Where this wick is at. Right on top of that candle. Right on top of that candle. Right where that candle's at. So those points tells us that became a reference point. There's some type of identity going on right there that says, this is interesting. Why? Because nothing happens for any reason. The market keeps data of certain reference points. So we know for a fact that 161.26 wasn't coincidental. That gap down just didn't step there for a reason. How do we know? Because we had multiple touches at that same spot, right? It'll be multiple touches at that same spot. So what we want to do is put that in our brain, right, and say, is that a support system moving forward, right? And so what I like to do is just identify, watch this, key levels on my chart that become reference points for me, right? And so we want to ask ourselves in our overall trend, when we're looking at this market, what do you see? Watch this. You see that, watch this, we are no longer Watch what I'm about to say right here. This is going to be essential. We are in a space in the market where sellers are dominant. Sellers are dominant. Sellers are dominant right here. So what you need to see, you want to see, watch this, you want to see the buyers get us on top of last week's low. All right, let's go a little further. Let's erase some of this off so we can go. And again, we just want to walk through it so we can just see what we've seen. I just want to give you some numbers on here so you can look at. Not trying to give you like trades or nothing like that. I just want you to see what's going on in the market. Close it off. Oh, look how beautiful it looked now. Look how all of our lines line up. Look what happens when we put previous day high, previous day low, previous week high, previous week low, previous month high, previous month low. Now what happens is we've boxed the chart up. So now I'm gonna help you out a little more. Watch this. Watch what we about to do here on the 4 hour. I never do it on a 1 hour, on a daily, but I do it on a 4 hour. Because we see where our swing high was, and we come down to the low. Watch this. So here's what we understand. I'm gonna show you something right quick. 571.44, which is a 50%er. 571.44 is a 50% move. So you gotta ask yourself this question. You now need on your 4 hour, for me, because this is where I trade from, 4 hour, 1 hour. I now need to see buyers get back on top of that 50 before I feel confident to say that we are back in upward momentum. As long as we under that 50% range, we are 100% still in seller's territory, which means the market has to create what? Lower what? Highs. So in that, it tells us as long as we under that 50%, we can get an upward move, we can get some buying pressure, but what does it bounce off to come back down to create lows? Oh, I hope that's making sense for us. So in a downtrend, you want to see what? You're going to see what? Higher what? Lower what? Highs. So you can see the market go up, but you got to ask yourself, is it getting back on top of our 50% retracement, or is it just creating a lower high to solidify the downtrend? Oh my God, I hope we got that. I hope we got that, because that's essential for us. I don't do it on a daily. I wait till I do it on a 4 hour and a 1 hour, because that's why I execute off, and that's where we get the most information at. Are we making sense here? All right, last but not least, we're gonna go to the 1 hour just so we can get out of here. All right, so now the 1 hour give us everything we need to know. Now, here's what's interesting when you look at the 1 hour. Now, you see more what? More candles taking place on the 1 hour, which means we got more information. Now, this tells us something though. This tells us we gotta really have our details dialed in. So the monthly, weekly, daily, that's the information that helps us execute on the 1 hour. So we don't go straight to the 1 hour. We start seeing different things and we start lining out different things so that once we get to our execution zone, we can execute to the fullest. So here's we go. Watch this. Based on this 1 hour chart, what do we see? We see something interesting, Trap. What do I see? I see, watch this, y'all. I see this happening. Did we see it on a daily? Did we see it on a 4 hour? Now let's look at the 1 hour. What do we see, Trap? We see buyers stepping in. We see buyers stepping in, going straight into what? Buyers stepping in, going straight into what? Oh, we see this. I hope we see this, y'all. So now what happens right here is Watch this. This gap, this zone, this pool becomes so critical. You know why? Because it can be fuel to go up or down. These orders that's inside or here can be fuel to go up or down. So that's where our 50% comes in at, because we tell ourselves this question. If the fuel takes it above the 50%, we know for a fact that what? Buyers have what? Regained control. But if the fuel can push it up and then now it becomes fuels that push it down, what happens is, watch this, the people that sell coming out of that actually fuel the downtrend. Oh my God. They actually fuel the sellers to push it down. So we got to ask ourselves this question. The next thing that happened is, why is it important that we understand this area of 568.84, the previous week low? You know why? Because I'm about to give you some game right quick. A previous week low is also a place where liquidity lies. Just like a previous week high is a place where liquidity lies. Why? Because those become reference points for the market to do what? Track footprints. So watch this when I tell you. Be mindful, if it goes up to that previous week low, see what it does there. Watch this. There's stops on the other side of that. Why? Because the market keeps track of lows and highs. The market doesn't care about feelings. The market doesn't care about emotion. The market only cares about what is the footprints in the sand. Because that's what it's going to base every move off. So we're going to lock in on our 50% retracement. We're going to lock on that previous week low, right? We're going to lock in on those. Why? Because if it hits that previous low, what does it do? It's an area of interest. Watch this. A previous low becomes a key area of interest for us, because if it bounces above that low and my 50, we know buyers are in control. But the market will go above that. Watch this. The market will put a wick above that previous week low and then shoot back down. It'll take those stops out of there and go back down to the downside. So we got to ask ourselves, in this moment, what is the market showing us on these key areas? That's all I want to do. I don't want to give you an entry. I don't want to give you an exit. I just want to help you mark out some key areas on your chart so now you can look at your chart and you can come up with whatever kind of data you need. I just want to help you get in the game and plant the seeds, but you got to do the fertilizing. Let's go, man.